Welcome back to Trade Journal. I must admit, I have not posted EURUSD in a while. It's been a minute, but here we go. Let's have a look at the market action and let's see what the plan might be moving forward. But first things first, if you are looking to get better as a trader, feel free to hit us up. We've got Bootcamp, which goes on the last Sunday of each month. And in Bootcamp is basically an online Zoom call where we go over market structure, liquidity, ranges. I teach you all my strategies for as much as I can in 2.5 hours. Okay, but it's a really good educational platform for you to also meet other traders and get better as a trader. I have delved into social media a bit, so I've got an IG page now and a TikTok page. I'm just having a bit of fun on here, and we've got some informational videos, a mix of informational videos / some memes and stuff like that. Recently, I made one on the Bitcoin halving, so I'm just going to play that for you guys, just to give you some education as to what's going on. Bitcoin price might reach 500k. Oh my gosh. Let's talk Bitcoin halving and what this means for you. Here's the deal. Bitcoin's latest halving is happening right now, reducing miners' rewards from 6.25 BTC to 3.12 BTC. But what does that mean for us? Well, historically, after halving, Bitcoin's prices tend to soar. But don't expect instant fireworks. It usually takes about a month for the full impact to kick in. Patience is the key. Now, some experts warn of potential downsides, like overbought conditions, but hey, others see this as a golden opportunity. Here's the scoop. Institutional investors are diving in, reshaping the market with spot Bitcoin ETFs, and experts even predict Bitcoin to reach 500k. But all we can say is, brace yourself for some volatility. Also, keep an eye out for the potential gains down the road. Follow Trade Journal for more. Alright, that's it guys. I'm new to IG, so feel free to explode my IG account. Feel free to follow. And I'll catch you guys there. Of course, you can just DM me there as well. That's a pretty decent platform to communicate with myself. Alright, well, let's get into the price action. We're going to start from, we'll start from the top and we're going to work our way down. Alright, it might take us a while, but we'll get there in the end. So let's see on the monthly, as of when this exchange / broker started to, post EURUSD, which 2002, we've got a series of high highs and high lows, as we can see here, taking us all the way up. And then we had a nice transition in market structure here, nice little range play, SFP, a second entry play, where we sweep the initial first high. And then after that, we rally down, okay, creating lower lows and lower highs. Well, we can see a nice divergent market structure here, as EURUSD loves to do. You won't see this as much in Bitcoin, you won't see this as much in gold, but EURUSD loves it. Look, we've got another one here. We've got a converging market structure, and then we've got another diverging market structure. And I'm pretty sure we've got some more here, all right? But it loves to do it. So I'm sure as you trade EURUSD and as you get more familiar with a particular pair, you start to see its personality. You start to see what it likes to do and what it doesn't like to do. So with EURUSD, for most of you who have traded this, I am sure you are aware of that, and that's something to always bear in mind because it can lead to false plays and false moves. But anyways, so where were we? So what happened here is that obviously we broke market structure momentarily, and then we came back up. And then guess what? We ride all the way down, breaking market structure again. And then we accumulated here, creating another nice 2-tap model. First entry, second entry, which meant we swept up, breaking market structure there. As we broke market structure there, guess what happened? So in terms of our market structure, let's see. So we came out, we retraced, we broke again. And then what did we expect it to do? Yeah, we expect it to carry on, No, that's not what we expect it to do, is it? Oh, well, it is actually. That's exactly what we expect to do because we have broken market structure bullishly. Nice little continuation would have been nice, but what did EURUSD say? It says, I'm going to break bearishly again, okay? It says, I'm going to do what I want and create that divergent price action. So what we're going to look at now, we've worked our way down all the way up to, 2022. So we have just covered about 20 years of price action in this brief analysis. Okay, so we're going to look at what happened here because this is where we are, aren't we? All right. So let's see, on a monthly we can see we've broken bearishly. All right, so we are in a bearish structure. We're expecting a retracement for continuation up. Well, we know Euro USD loves that divergent price action, so if it does this, will we be surprised? Probably not. All right, so if we zoom in, let's look at the daily. Well, on the daily, we're going to zoom in to see what's going on. On the daily, as far as the daily goes, we can see that, in Euro USD, having that breaking structure, which we saw clearly on the monthly, all right, this is that retracement. Is this a retracement for that, next lower high for continuation downwards? That's what most traders, are, waiting for. That's what most traders are thinking at the moment. But before it did that, it says, I'm going to range. It says, I'm going to range for a bit. So what we're going to do now is we're going to look at that range. Is this distribution going to break up or is it going to break down? That is the question. So as we go now to the 4-hour structure, we're getting closer and closer and closer to see what Euro USD was been up to. Within that range, what did it do? Well, it started to go up, creating high highs and high lows. And then guess what? It broke bullishly. Not only did it break bullishly, it said, you know what? And I'm going to break bearishly. Okay? Again, creating that divergent market structure that it loves to do. So is this breaking structure? I mean, it wasn't the most aggressive breaking structure. Some people wouldn't even count this as a break if you go on a higher time frame, but perhaps this is a convincing enough break for us to get that retracement for that further flush down. So that's where we are now. As far as that flush goes for Euro USD, where are we now? Well, as part of that flush, what seems to be happening is that, from the top, we've kind of had, this little triangle here, nice triangle. Look at that, nice triangle. Then we had a nice triangle here. Okay, is this the next nice triangle? Okay, that's also what we're thinking about, isn't it? Okay, we've had a nice range. We've had another nice range. Is this our next nice range? Okay, that's what we're thinking about. So as we work our way in, let's see what is important for us not to miss. Well, we cannot miss the idea that we are bearish. We're bearish on the daily, we're bearish on the weekly, all right, and we're bearish on the monthly as well. So Euro USD is showing us bearish signs. Now, as far as this internal market structure, we've had this range, okay, and then we had a bounce from the bottom of this range to the top. We gave that trade in advance. I'm pretty sure we gave that one from memory, and that swept all the way down. And we said, as we sweep all the way down, we were waiting for this zone. This was the exact zone that was given well in advance, all right? And not only did we get that zone, we also got a nice accumulation model, a Trinity model one from that zone where we had, we had tap 1, we came back, we had tap 2, lower than the previous tap, and then we came back, and then we had tap 3, and then bang, off we went. Okay, so 1, 2, 3. That's exactly what we got there. Okay, and that was what, was a propellant. That was a propellant to take us where we are right now. All right, but we cannot miss the fact that we've got this nice trend line of liquidity, this bear trend line of liquidity here. And this trend line is beautiful. Look how it's been respected. It's been respected once, twice, 3 times, 4 times. Now it looks like it may be respected a 5th time. Okay, so is this where we're going to get that reaction for that continuation downwards? That's what we're about to analyze. Now let's take a look at the internal structure to see what our game plan is. Well, remember what I said to you earlier about Euro USD loving this divergent market structure? Well, guess what? It's done it again, hasn't it? All right, so let's see. In terms of our market structure, we've got high highs, high low, high high, high low. If you're going to go up, why don't you print another high low for a higher high? Instead, what does it do? It breaks structure bearishly and then it breaks structure bullishly. Okay, so Euro USD loves this. So this is something you have to be aware of if you trade Euro USD on a daily basis. All right, anyway, so here we are. We've obviously broken structure again bullishly, and as we broke structure bullishly, we've created this nice demand range, which means if we are continuing bullishly, okay, there is a chance that we're simply, going to pull back from this break, pull back in, we're going to break up, pull back into our zone for that continuation up. there is that chance. Now, why would that be an attractive idea? Well, look what we've got above. We have got this 4-hour supply zone, and this is a juicy supply zone. Why is this a juicy supply zone? Because look at how aggressively we came out of that zone. It was literally, that is a massive candlestick. That tells me there was a lot of high volume players, big volume players in that region, and they could potentially be unfilled orders that are looking to get filled in the future. All right, so that's what we're looking at here. That's a reason we could be rotating up. Now, if we are to get that rotation up, where is the highest places, the highest predictive probability areas, the highest POIs that we could actually say this place has the edge, this place has a high probability of getting a reaction from? That's what we're going to take a look at in a second. All right. Also, we realize we're in this range at the moment. We've got our range high, we've got our range low. Okay. And because we're in a range, all our range models come into play. Range model 1, range model 2, range model 3. Now, these are the models I share personally with the people I teach one-to-one. And, I give some of it from time to time in the bootcamp and in these streams as well. So if you do go back through a lot of these streams, you will see that these models are the models I use, and you could pick it up as you go. All right. But here we are. We've got our range models in play. We've got our market structure in play. Let's see, where are our next trades? Well, why don't we talk about the long options first? Let's talk about the bulls. Now, in terms of the bulls, what's the case for the bulls? Well, the case for the bulls is we have broken structure. We've broken structure bearishly. All right. We've had a bearish breaking structure, as we can see here, of about -1%. All right. And now we're looking at that retracement leg. Now, if the bulls were to win, all right, and we rally further up, there are some obstacles. Obstacle number 1, we have to break this trend line. And we have to break this trend line in a convincing way. Why? Because we also have this 4-hour zone above it. This 4-hour supply zone. Now, these are obstacles. Now, if we break this trend line, all right, and break this zone, that will be really bullish. Why? Because we could look to get that retracement. That retracement could happen off the actual zone, or it could happen off the retest of the trend line. This would be the juiciest option. Okay, and we could take that at the very least to that range high. Okay, that would be the target of that trade if we were to get that. But of course, we don't have that yet, and until we see that break, we can't really plan for that. So that's one for the bulls. Now, why would we go all the way up there? Well, of course, we've got this 4-hour zone up here. We've got another 4-hour zone up there. Okay. But if we are to go up that zone, the higher and higher we go up that zone, the more it tells us that perhaps we're going to have another transition in market structure. Or perhaps we're just simply going to SFP that range high and then drop down. Don't forget, market structure and price is allowed to rally as high up as it wants. Okay, on that retracement leg, it's allowed to go as high up as it wants before it breaks structure and still keep that bearish market structure. It can do that, right? Until we get a close above this level, market structure can continually rally up. Okay, so that's one for the bulls. All right. Now, if we are to rally up, then the bulls are asking, where do we get into our next trade? Well, we have to look at this. Let's look at this demand range and see where are our zones. If you look deeper, you can see that we do have some zones in here. All right, we have a 45-minute zone, all right, which we can look to get a trade from. We also have our last internal high low here. So we have higher high, higher low, higher high, higher low, higher high, higher low, and this becomes a 24-minute/30 minutes, our last high low, which we could look to get a nice SFP from to get a rotation. Now, hence why we've got a long trade over there. Now, I'm going to put another long trade here on this zone if we SFP that zone. And there is a chance we SFP that zone and wick into that 45-minute zone. So I'll put my stop loss over there. And I'm looking to ride that to the range high, giving us a nice 4 risk to reward. So not bad. Not a bad trade by any means. Okay, now it's a lot of things that needs to happen for that to take place, but that's fine. It's possible. It is possible. So what do I mean by a nice SFP? I'm looking for price to not close below that level. So if I draw a nice bearish bar for you, to not close below that level, but I want price to wick below that level. And not only wick below that level, but wick below that level into our zone. That would be a nice play. If I get a nice market structure change, a bullish transition in market structure there, that would be nice as well. Okay, so that's my bullish scenario. Of course, we could get our R1 model, which is a rotation of this level, which we're coming towards at the moment. But I must say, look, that's quite aggressive, isn't it? So unless we get, convincing market structure as we come to that level, it's a difficult one. You may not want to touch that one. All right, but anyways, we're going to look to see. We may actually get this on stream, and we'll analyze that as we go. All right, now, what about our shorts? What about the shorts? Well, I guess the shorts, technically we should be looking to print that, next lower high for that continuation downwards. Technically this is what we're expecting, isn't it? In terms of probabilities. So how could this happen? How could we enter our next trade? Well, trade number one is a sweep of this range high. Okay, a second entry play off this range high. Okay, trade number 2 is to potentially get a reaction off a zone here, but I've checked, there are no zones there. Okay, it's not to say price won't still get a reaction there. There are no zones there. There's just no zones there. Okay, also another reason why we could rally up is look at these fair value gaps. We've filled about half of it. Okay, but we still have a little bit of inefficiency here to fill, and we've got this zone, of course. Okay, all right, so how could we enter a short trade? Well, this isn't the best looking distribution. This isn't the type of distribution I like to see. I like to see a nice distribution where, you have that initial high, then you get that price action that sweeps that first high and then drops. That's what I like to see. But that doesn't seem like what we're getting here. So what can we do? Well, in that case, we have to play our classic counter trend model 1, which is high, 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 low, high, 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 low, high, 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 low, high, high. So we've got to wait. We've got to wait for that to break structure, and then the continuation, and then we get in on that continuation for that follow through down. Okay, that means all of this, looks promising, but we have to wait. We have to wait to see what price does. Okay, that's how I trade, and that's how I encourage anyone following this channel to trade as well, is to actually react to market structure rather than guessing and saying, well, price should do this, so I'm going to do that now. No, let's just wait and see what price does, and then we get into that trade. Okay, you might not have the best risk to reward, but you have that backing, knowing market structure is on your side. All right, however, be careful though, because if we are waiting for price to obviously rally down here and get that retracement up, there are a few things stopping it. Number 1, we've got this zone stopping it. What's to say price isn't going to SFP and rotate up? That could happen. Number 2, we've also got this demand zone, all right? So this is a very key level to watch out for, because even though we are entertaining the idea that we've got a demand zone here, we've broken out of demand, we're going to retrace back into demand and then continue up. You do have to, watch your zones clearly. So let's summarize then. What are we looking out for in terms of this internal level? Well, as for our shorts, really and truly, I would love to have had a nice sweep of that high. That would have been a juicy play. But in terms of my next short play, well, that's the one I'm looking out for. And then I'm looking for this level to get broken. Do you know what? It would be great if I see all of this broken. That this low gets swept and this demand zone get lost, close below it, and then we get a retracement, and then we go further down. That would be ideal, honestly. That would be ideal, because it means there's nothing left looking to push price back up. But there is a chance that we simply just get a close, perhaps in the middle there, and then we retrace up, and then we go down. But regardless, we're going to be looking out to see what price action does, and I won't be entering this trade yet until I see something that looks like a clear bearish market structure change, going from printing high highs and high lows, to low highs and low lows. Okay, so I'll be looking to enter my trade based off of this transition in the market structure here. That would be my entry. Okay, so as far as Euro USD looks, that's what I'm looking to play. So we've got short number 1 from the range high. If we do rotate back up, great. If we break across this, out of this range and into this level, I'm looking for the pullback on that, pullback to zone. And then I'm also looking to long this level here if we get transition in market structure. structure. Remember, no change, no trades. I am waiting for each and every one of these levels to get a rotation in market structure. That's my confirmation. And Market Cypher will also be giving me either a bullish divergence or a bearish divergence, excuse me. All right. Otherwise, I'm going to clean this up and I'm going to post it on the charts. I hope you found this information useful. If you have, hit that follow button to stay up to date with more timely price action trading. Also, don't forget to smash the follow button, not just on TradingView, but on all social media platforms, YouTube, IG, TikTok, all of them. All right. Anyways, I hope you have a lovely evening and I will see you tomorrow. Well, probably not tomorrow, but at some point this week.